going for a couple of years in South Africa. The first one, Satrix 40, was launched in 2000. I know because I launched it, because I was the person who helped, or was one of the people who helped launch it. But we've since had so we've got nearly 10 years of ETFs in South Africa, so we've got 10 years performance. And because they're listed on the stock exchange and they're normal shares, we've got a data source so we can check what the price has done. So we've got a lot of information now on ETFs and how they're performing. And there's all sorts of ETFs that really perform very well. If you buy, say, the Satrix Indy 25, which is the industrial index, that's given you something like 32% per annum return each year for the past 3 years. And over the past 7 years, I think the return is about 23% per annum, because there's been a dip in the market in between. And you may say 23% per annum, how good is that? Well, that's the third best performing unit trust ETF in the country. So yeah, you've got a tracker fund that's right up there amongst the top, and there's over 1,000 unit trusts. So this one's in the top, quartile, top 6. And there's other ETFs that perform very well. New Gold is the best performing product in South Africa for the last 5 years, and that just tracks the price of gold. And New Gold's given you a performance of about 25% per annum over the last 5 years. The next best unit trust is 14%. So that difference is massive. So what you can do with ETFs is you can find different indices of different types of assets that generate very good performance for you. So what you've got to do is go and look at the performance. Well, what happened in America, and ETFs are a very big business in America. Something like 50% of all retail money, new money, goes into ETFs. And some goes into shares and some goes into other products and so on. But it's ETFs that dominates the market. And the same thing's starting to happen in Asia and to some extent in Europe. Though the European market's more of a derivative market, but it's also quite big. Now in South Africa, ETFs are quite a small portion of the market. So what will happen is, I think, what is the same thing that happened in America. And eventually when the public becomes educated and says, well, why should we pay very high costs for a product that can't outperform a simple ETF? They'll start demanding ETFs. And what will then happen is the institutions that currently are issuing active, relatively high-cost investment products will start moving towards ETFs. And in America, that's what happened. The two biggest asset managers in America, Vanguard and Fidelity, who are the equivalent of Mutual and Sanlam, just moved their whole product to ETFs. So now if you go to Vanguard, I think 70% of all their product range now is ETFs or tracker funds. Now you can get a tracker mutual fund or you can get a tracker ETF, but they've moved towards low-cost, simple products because that's what the market wants. So once people get educated, they'll start demanding that, and then the institutions will have to move towards that. And I think in the end we'll get better products, particularly when you're looking at long-term products. If you've got low-cost products, you can't believe what a difference a low cost makes over long-term investment, for instance, a retirement fund or a pension fund. We'll see that movement, and it's happening internationally, and it's starting to filter into South Africa. So my guess is the next 10 years will be a broadening of the market, more people issuing ETFs, more people demanding ETFs, and we'll find it's a business that will be, it can't be equal size to unit trust, because unit trusts had a long-term period to grow. But already we're finding more new capital is moving to certain types of ETFs than into unit trusts in South Africa, and I think that will continue.